Hi, this is Rob Booker, and I'm joined by Scott Welsh. This is the risk disclosure. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you, and before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Today we are here to discuss the Bossilator, and on my screen in front of us you can see I'm sharing the Bossilator presentation. This presentation, as well as every other piece of material that we discuss today or at any other time, will be made available to you through the forum, and we'll talk about that today. The Bossilator is a time-based approach to trading, and during this webinar today, I will introduce you to Scott Welsh, introduce you to the general principles of Bossilator trading, introduce you to the forum, the chat box, and other materials that we have available to help you learn the Bossilator and even show some examples of what these trades can look like. As a reminder, if you go to the home page of the forum on piptoring.com/forum, you will see a chat box. If you chat and ask questions through that location, you will be able to see what everyone else says, trash talk, and there is no censoring on that. So just be aware that whatever you say there is viewed to everybody, and it will be used against you in a court of law. Scott is here with us today. Scott is the most successful in dollar terms and in just getting it right terms Bossilator trader of all time. Scott, hello.
Hello there.
Scott, you want to take just a moment and introduce yourself to the group in any way that makes sense to you?
Sure. My name's Scott Welsh, as Rob said. I live in Columbus, Ohio. Not necessarily happily, but I've lived here almost all my life. I've met Rob a couple years ago. Just fascinated by his systems, and I've traded all of his systems, and I actually was able to make money on all of them. But for whatever reason, the Bossilator just made sense to me the most, and it sat with me the easiest. And so I was able to trade it pretty successfully. And now I'm here to talk about it and to learn more about it. So I'm very excited to be here.
Thanks, Scott. Scott's here because Scott made money from a methodology that you're about to learn. He made the money from this methodology over a year ago, and the same principles that Scott implemented to make that money are still available today. It's not the only method that Scott ever used, and it's not the only method that Scott would ever consider using. But when Scott and I were talking about a way to help traders and work together in doing so, we decided to use a method that he had already proven could be used to make money, that he would feel comfortable sharing the tips and the tricks and the strategies that he used to do that. And we spent time discussing ways to improve the risk profile of this methodology, meaning decrease the amount of money lost per losing trade and increase the amount of money made per winning trade. And what you're here today to do, and over the course of the next 30 days, is learn this methodology with help from people who have made money trading this methodology already. And in our webinar today, I want to introduce this methodology to you from a conceptual and a general point of view. And then I want to show you some examples of what it looks like to trade this methodology. And then I want to tell you what you're supposed to do over the course of the next 30 days. And then I want to bring it all back home and explain how what I said during this webinar brings you closer to the goal of making money from what you already know. Bossilator is a time-based approach to trading the markets. Now, in order to understand what I mean by that, I need to show you a picture of the 800 period simple moving average. Remember, all of these charts will be, and all of these slides will be available to you inside the forum. The 800 period simple moving average is simply the closing price of the last 800 candles added together and then divided by 800. You don't need to do the math yourself. Your charts will automatically do this math for you if you simply install the 800 period simple moving average on your chart. You just click on moving average, choose simple, choose 800 for the period, And I would recommend you choose a dashed line of any color to represent the 800 period simple moving average, just so that we all know what we're looking at when you post your charts. The easier you make it for me to see what you're doing, the easier it is for me to comment on it inside of the forum. So I would recommend a white or black background on your charts and either a black moving average or a white moving average depending on the background color of your charts. Now, as you can see here on the chart in front of us, I've put pictures of the Death Star from Star Wars over the 800 period simple moving average. That's because the 800 period simple moving average sort of acts as a magnet. A currency pair will spend time away from it, and then it will go back toward it. And if you get within a certain amount of distance from the 800 period simple moving average, it seems that a currency pair will snap back and hit that 800 period simple moving average. It's as if it has its own center of gravity. And the larger it is, the heavier that gravity is, and the stronger that gravity is. And we'll talk about that in just a moment. And at any time during this presentation that you have questions, you're free to ask those questions, and Scott might keep an eye on the forum homepage or the questions section of the webinar software. For every candle that stays away from the 800 period simple moving average, the Bossilator grows. The Bossilator is simply a measure of the length of time that a currency pair or any other financial instrument has stayed away from the 800 period simple moving average. It's a unique perspective on looking at the market. Most of the time when you look at an indicator on your charts, you're looking at something like a pivot point that's fixed in time, or a moving average that's dynamically moving in time, a Bollinger Band that's dynamically moving in time, or an Ichimoku cloud that's dynamically moving in time, or a MACD or stochastic oscillator that will dynamically move in time. And all of those indicators sort of add price and time and mix it up in a way that can show some colorful lines on the charts. And then everybody panics if the red line crosses the blue line and so forth. And indicators are plentiful and easy to find all over the place. Well, the Bossilator is a little bit different. It's simply a time-based measurement. It's very simple, and it can be reduced to one number at any given time per time frame chart that you look at. It simplifies the whole process of putting into perspective what you want to do in the market. For every candle that stays away from the 800 period simple moving average, the Bossilator will grow by 1. A move above the 800 simple moving average signals the beginning of a bullish trend. A huge portion of what we do together during this course will be to discuss what it means when a currency pair starts to move upward and away from the 800 period simple moving average. Well, a move below the 800 period simple moving average can signal the beginning of a bearish trend that can move lower. Now, that may seem simple and it may seem very straightforward, and if it does, that's the best thing in the whole world, because everything that we do here together should be simple and straightforward and isn't going to be rocket science. I'm not going to ask you to do quadratic mathematics or discuss the theory of relativity. Everything that we do should be rule-based and objective, and what we're going to do here, folks, is look at the moves that a currency pair makes above or below the 800 period simple moving average, and then reduce that move to a trend or a counter trend opportunity, and then take what you've already learned about trading to take advantage of that trend or counter trend trading opportunity. Some Bossilator readings, and they're always numerical, will signal a trend trade that you should take, and some will signal a counter trend trade that you should take. The big numbers that we're looking at when I talk about these numbers are 500 candles or bars, 1,000 candles or bars, or 1,500 candles or bars. So remember, these are the numbers that you're going to remember: 500, 1,000, 1,500, and even as much as 2,000. It's extraordinarily rare that you will ever see a Bossilator reading that is stronger than or higher than 2,000 or lower than negative 2,000. A positive Bossilator reading represents a currency pair that is above the 800 period simple moving average, and a Bossilator number that is negative represents a currency pair that is below the 800 period simple moving average. We have a question, Scott, and it's not really an interruption. It's a great time to answer this question. Why the 800 period simple moving average? And Scott, I guess maybe I'll answer that simply, and if you have anything to say, you could comment on it. The 800 period simple moving average doesn't move a whole lot. It does move dynamically as price moves along the chart, but it doesn't move often, and it has sort of an almost fixed place in time. And Scott, that makes it easier to use the 800 period simple moving average as a target.
Oh, I agree. The other way I thought about it too, and I think it's funny if you want to tell the story on how you came up with the 800. I thought that is a very good story. But the 800, because it's so many bars, because it takes price from 800 candles, that it's almost like, and the way I think about it is even like fair value of an instrument, of a stock or a currency. Because it's so many bars and it's taken in the price over such a long period of time, you could look at it almost in a fundamental way, even though it's numerical, and say, this is kind of what the value should be. It's over 800 candles. And to trade to that makes sense, because if it goes far away from that 800 average, it's extreme, or it's something you want to get involved in on the trend side.
That's really fantastic. I was reading about 6 years ago, maybe 7 years ago now, an annual report filed by Goldman Sachs' chief technical analyst, and he actually came right out and said, my favorite moving average is the 200 period simple moving average. And it was early enough in my trading career that I said, well, if it's good enough for the Goldman Sachs chief technical analyst, then it's good enough for me. And I said, well, what if I could view simultaneously on multiple different charts the 200 period simple moving average, but only look at one chart? And I said, wow, if I was looking at the 1 hour chart and I plotted the 800 period simple moving average, that would be like looking at the 200 simple moving average from the 4 hour chart. And thus the 800 simple moving average, or my fascination with it, was born. And all of my back testing from then on with moving averages centered around the 800 period simple moving average. The 800 period simple moving average is a moving average that is applicable to and useful on any time frame chart and any currency pair. Consider for a moment that it's such a long-term view of a currency pair, just like Scott said, that the noise or the back and forth quick movement that would come on a very short time frame chart would not be nullified by looking at the 800 period simple moving average. By looking at the 800 period simple moving average, you are automatically taking a longer term view of whatever currency pair chart you're looking at. And so it doesn't matter what time frame chart you use it on at all. These numbers, 500, 1,000, 1,500, and 2,000, seem to work and have seemed to work for years and years and years on any time frame chart and any currency pair. It's as if the world knows, just like Scott said, that if a currency pair moves too far away from its 800 period simple moving average, it's bound to go back. You can bear this out in any kind of testing you want to do. If it moves away from it and it spends a certain amount of time away from it, it needs to return. The market understands that there is some sort of fair value attached to a financial instrument, and all a trend is a deviation from that fair value. When the housing market goes up or down, it trends. We're in a downtrend in the United States housing market, and then a trend bottoms out, and then it comes back up and levels out after a while, and then it goes through a bullish trend where homes are overpriced in quotation marks, and then it comes back down again. There's some fair value in the middle, and the 800 period simple moving average is just a way of looking at the middle and understanding. Once you know what the middle is and you've made a decision about what you're going to make the middle, you can start to look for trends when price goes away from that middle. That's all the 800 period simple moving average does for us. Well, where do we get these numbers from? Where do I come up with this idea that 500 or 1,000 or 1,500, where do I come up with the idea that those numbers are useful or important? Well, it comes from data collection. Data collection and analysis is my hobby, and it may even be my full-time job, really, even besides trading. I spend an extraordinary amount of time collecting data, price feed data from brokers, putting that data into Microsoft Excel, and then analyzing that data based on its deviation from an 800 or some other such location. I don't want to know that it looks funny or it looks cool or it looks colorful on the chart. I don't even want to know that it would sell a lot of copies if I tried to monetize or sell it as a course. Here's what I want to know. I want to know, because I'm trading this stuff too, I want to know how far is too far for a currency pair to go away from the 800. Now I could do that by looking at each individual instance on each individual chart over each individual year forever, or I could plug a bunch of data into Microsoft Excel and I could pound out some calculations, and you can see my Microsoft Excel spreadsheet here. I could pound out some calculations to show that in this instance the currency pair spent 229 bars away from the 800, and then it started going away from the 800 again, and I made formulas that would calculate the distance that it would go away from the 800. And I did this for every currency pair on every time frame chart, and it took hundreds and hundreds of hours to do that. Well, what I found when I did this for hundreds and hundreds of hours was that I kept coming back to 500, 1,000, and 1,500. That once a currency pair would get to 500 or 1,000, it would start to make its way back to the 800 period simple moving average. So you can imagine, for example, that every day you walk to school, and that walk to school is generally the same distance. And everybody within the school district is going to essentially walk the same distance to school with some deviation based on how close they live to the school. But generally speaking, if you all were different currency pairs, because you live inside the same school district, your walk or your travel to the school is going to be reasonably similar across the universe of all students that go to that school. Well, that's true of currency pairs and financial instruments. They all kind of go to the same school, and their walk to school is generally going to be something very similar. And a fat group of people in the middle, like a huge, large group of people in the middle, are going to have a very similar walk to school. And that's kind of what we're looking at here, is how far or how long does it take a currency pair to sort of play out its trend and then make its way back to the 800. And a surprising realization that was born out from data collection and analysis was that once a currency pair on any time frame chart had spent 500 to 1,000 candles away from the 800, it tended to start to make its way back. And what I realized was, if I knew that 500 to 1,000 was sort of the trend move, I could take trend trades up until that time. And if I knew that past 1,000 was when it started to make its way back to the 800, I could start actually counter trend trading after that point. And that's where this data collection and analysis turned into something tradable. Now, what I'm doing at the present time is taking a direct price feed and all historical data and shoving it into an Oracle database using the services and the partnership with a friend of mine in Connecticut, William, and we are collecting this data on the fly and doing more and more data collection and analysis than we've ever been able to do on the fly before, and drill down into that data and get more and more specific. And the numbers keep getting borne out in the same way. When a currency pair has spent 500 candles to 1,000 candles away from the 800, it tends to start to make its way back. And here's a picture of me driving back to my office with all the data that I'm collecting. You can imagine here that you're coming to the webinar and you want to know, what are some of your final conclusions, Rob? Well, and I want you to know that those final conclusions were reached using spreadsheets and data collection and analysis. And all of those spreadsheets that I used, and the master spreadsheet in particular, of course, I will make available to you so that you can actually import and do some of your own data collection and analysis if you're familiar with that process. Scott, do you have anything that you want to add at this point, or any questions that you've seen come up that would be interesting to discuss?
I haven't seen any questions, but I do have possibly an interesting point. Is I started in stocks when I just got infatuated with investing, as pretty much everybody does, seems like. And I was infatuated by Warren Buffett more than anything else. I thought Warren Buffett was the greatest. I read every single book that existed on Warren Buffett. And Warren Buffett, of course, says, find the fair value of a stock, and when it goes crazy, you know what the fair value is and trade back to that number. Well, I got pretty good after reading all these books about getting the fair value of a stock. And so after I learned the Bossilator, after you introduced that to me, I went back to my stocks and I started looking at a couple, and I did my 5-year analysis of earnings per share and PE ratio and all that, and I'd come up with a number, and I looked on the chart, and it was almost exactly what the 800 simple moving average was. And I thought, isn't that pretty cool that you don't have to do all this number crunching, you don't have to get out your financial calculator. All you have to do is put an 800 simple moving average on your chart, and that is your fundamental analysis. And if it gets too far away, you know it's coming back to the 800, you can trade back to quote-unquote fair value. I just thought that was amazing. And if it works on stocks, then don't we have then fair value of futures or fair value of currencies? And thus the 800 has become a really important number to me.
Excellent. Thank you. Here's what Warren Buffett said about the market and about what Scott just explained. He said, Ben Graham, my friend and teacher, long ago described the mental attitude toward market fluctuations that I believe most conducive to investment success. He said that you should imagine market quotations as coming from a remarkably accommodating fellow named Mr. Market, who is your partner in a private business. Without fail, Mr. Market appears daily and names a price at which he will either buy your interest or sell you his. Even though the business that the two of you own may have economic characteristics that are stable, Mr. Market's quotations will be anything but, for, sad to say, the poor fellow has incurable emotional problems. At times he feels euphoric and can see only the favorable factors affecting the business. When in that mood, he names a very high buy-sell price because he fears that you will snap up his interest and rob him of imminent gains. At other times, he is depressed and can see nothing but trouble ahead for both the business and the world. On these occasions, he will name a very low price, since he is terrified that you will unload your interest on him. And that's exactly what Mr. Buffett is explaining, is that sometimes Mr. Market quotes a price for something that you are interested in buying that is so low and so favorable that you cannot pass up the opportunity to do so, because your risk in doing so is contained and your upside potential gain is extraordinary. All right, we have some comments. Let's see what comments are coming through. I'm going to expand this window in order to read the comment. All right. Can I increase the size of the web page? I can do that next time for sure. All right. Everything that's been asked I'm going to answer in the next few moments here, so we're all good. The course goal for the next 30 days is to teach you to identify and experiment with trend and counter-trend trading methods using the Bossilator to provide the context about trending and counter-trend market conditions. What the Bossilator is going to do is help you understand what Mr. Market is saying. When the Bossilator reading becomes something extraordinary like 1,500, you know that Mr. Market has become absolutely out of control and is mispricing a currency pair. And in that instance, you want to trade it back to fair value against the direction that it has been going. At other times, you might realize that Mr. Market is onto something, and he's going to travel with this financial instrument in a certain direction, and we want to follow along. But the end goal of this course is to help you trade a small number of currency pairs with small stop losses and large profit targets in a consistently profitable manner and forever. That's the goal. The goal is for you to focus on a small number of currency pairs with small stop losses and a large profit target on each trade in a consistently profitable manner. I hope you understand, and we're going to bring this back up again, that this is the only goal of the course. My goal isn't to entertain you or to show you how you can gamble away your trading account or take 500,000 million trades. My goal isn't to make you feel excited and get a dopamine release by trading every day of the week. My goal is for you to trade a small number of currency pairs, maybe even just 2, with small stop losses, meaning maybe even a stop loss as small as 10 or 20 pips and a profit target as much as 100 to 200 pips, and do that in a consistently profitable manner forever. That's the only goal I have. In some cases, I'm going to tell you that you should cut it out and stop trading so many currency pairs. In some cases, I'm going to tell you that you should trade even fewer currency pairs. In some cases, I'm going to tell you that you should even trade fewer days of the week. I'm probably going to be the biggest buzzkill you've ever had. I'm going to teach you a trading system that I believe works and that I think has been proven to work. And then I'm going to ask you to focus so tightly on a small universe of things that you will do that it will become boring or even a little bit uncomfortable for you, because you'll watch as other people are trading a lot of things and you'll become anxious to trade alongside them and do what they do. But I'm asking you right now to follow along with me on the goal to trade a small number of currency pairs with small stops, large profit targets in a consistently profitable manner, and do that forever. Scott, you have anything to say about that?
Nope, that sounds good.
Okay. Here's some chart examples. Scott, I'm going to show some examples, and I thought you might show some examples as well of what this kind of looks like. And as I show you these examples, I want to explain some elements that might be on the chart when Scott looks at it and might be on the chart when I look at it. On this chart, you can see a Bossilator at the bottom of the screen and some moving average in the middle of the screen. The Bossilator at the bottom of the screen is simply a line that grows and grows and grows and moves higher and higher as price spends more and more time away from the 800 period simple moving average. The indicator that's available for Forex Tester looks exactly like this. The indicator that's available for Metatrader looks more like what you're seeing on the screen in front of you right here. It gives you a reading up in the upper right-hand portion of the screen that shows you the length of time that it's been away from the 800 period simple moving average. They both show you the same thing. They show you the length of time that it's been away. The red line on my chart is the 62 exponential moving average, and the blue line is the 200 period simple moving average. And the dashed black and white line is the 800 period simple moving average. You can see here at the bottom of my screen that the Bossilator line at the bottom turned blue. Well, that turned blue when it had gone 500 candles and it still had not gone back to the 800 period simple moving average. And as you can see, it moves below the 200 period simple moving average and then rockets down to the 800. That's an example of what a counter trend trade, a trade back to the 800 period simple moving average, might look like. Here's an example again of a currency pair that had spent 500 bars, candles, or time periods since it last hit the 800, and then it jumped above the 200 period simple moving average and then made a quick move to the 800. Here's another example here of a currency pair that had spent 500 candles away. How do we know it was 500? We know it's 500 when the line turns blue at the bottom here, or if you're using the indicator that you can already download from the forum, we know it's 500 when the bars reading goes to 500 right here. If I switch to a different time frame chart, we might get a different reading on those time frame charts. And those are some examples of currency pairs that reach 500 candles since they were last at the 800 and then move above some mark that we choose, and this will all be part of the course, and then make their way all the way up to the 800 period simple moving average. And this is an example of a counter trend trade situation. Let me see what questions came up, and then Scott, when you're ready, we might make you the presenter and let you show an example. Nirav says that the 1 minute 800 period simple moving average has been working really well, and that's just fantastic. It is intended to work for all time frames and all pairs. Scott, there's a question that came in. Would this work on other financial instruments? And that's been a big source of conversation between Scott and I. And Scott, do you want to answer that question?
Well, the quick answer is yes. It works fantastically on everything. I don't know why I feel this way, but I feel like it works best on stocks. But what does best mean? It works fantastic on currencies, and I actually traded on currencies. But the answer clearly is yes. It works on everything.
Yeah, and it absolutely does, and has been looked at and evaluated on other financial instruments also. But in particular, You can imagine for a moment that the stock market sort of has an upward bias, a buy-side bias, right? It's generally speaking. And if you're a short seller or an options trader or you're a long-only stock trader, Mr. Market is going to occasionally quote you a price when a stock has been above or below the 800 period simple moving average for an extraordinary length of time. And then it represents a deviation from fair value, and then you can take a trip back. For those of you that are interested in stocks and want to be included in a discussion of how the Bossilator applies to stocks, we welcome that discussion, and you'll be hearing more from us at the end of the webinar on that subject in particular. But keep that in the back of your mind. Robert asks, do we offer the indicators for e-signal charts? And Robert, it's just a matter of supply and demand. If we had enough individuals who are interested in e-signal charts, it would be economically possible for us to go out and spend $500 to $1,000 to have those indicators built for e-signal. We don't have them built for e-signal right now, but as of right now, you could simply switch to any time frame, any financial instrument, and then just measure the number of candles that have gone by. It could be something that we do in the later if we get enough interest expressed. Nirav says the stop loss is only trading the euro. Is 10 pips and overall made with 7? Okay, that's not a comment we can really use right now. Clive says, what's the favorite time frame or the most consistent? Well, Scott, why don't you take a moment and maybe show a chart, and we could address that question of what's the favorite time frame or the most consistent that you like. I'm going to make you the presenter when you tell me that you're ready.
I've got my chart ready on the euro dollar.
So everyone, Scott's now the presenter, and he's going to show some examples. And while Scott's getting set up, William asks, do we have the indicators for Thinkorswim? No, we don't. And is it available for TradeStation? We're in the process of having it remade for TradeStation Securities, Mark. There has been enough interest expressed in that that we are going to make it available for TradeStation Securities. So, okay.
Well, to answer the time frame question first, I know that I love trading. I've read a lot of books and I've heard a lot of different people, and a lot of people say, well, this works on any time frame. It's applicable, it's robust, it can work on anything. The 800 simple moving average does actually work the same on everything. And we've been talking about stocks because I think stocks are easy to understand. You can take a daily chart, use the 800 as your fair value, and trade toward that, and it works fantastically. But what I have on my screen is the euro dollar 1 minute. And when I did my trading, I actually took that principle and took it all the way down into a micro level, down into a 1 minute, and I even went below that. I even went down into tick charts, which is the same thing, only even more micro. And it works the same on the 1 minute. The charts look exactly the same. If you covered up the time frame in the upper left-hand corner, you wouldn't know what kind of chart it is. And I just wanted more quick trades, so I used a smaller time frame. But here's an extreme example from the euro dollar from this year, from 2011. And you can see that it's been away. There's the blue, the same as Rob. It's been away for almost 1,000. And then my indicator for TradeStation turns red at 1,000, which is getting absolutely out of control. You can see that near the end of the run in this 800, 900 time frame, it almost gets back to the 800. And I would consider that a hit. But you can see that it works, and it made its return to the Death Star right there. But if you happen to miss it, it is 3 o'clock in the morning Eastern time. If you missed it or woke up later or woke up an hour later, you can see it went down extreme again. It still hadn't hit. It's still been away for over 1,000 bars, and then it returned back to the 800 there. That's just an example, and I actually, over the weekend, had charted every single move on the 1 minute chart in the euro dollar since 2007. And if it gets to 1,000, that's craziness. If it gets to 500, that's tradable. But a 1 minute chart, 5 minute chart, honestly, it just simply doesn't matter.
Right. And so if you're a short-term trader, or if you have short-term trading in mind, this 1 minute short-term chart is something that you might consider looking at. And so that answers the question about, time frame. Like that short time frame is something that would be interesting to Scott. Here's an example of 500.
Yeah, it's been away 500, and I have Bollinger Bands up here too if you want to know what those lines are. But it's been away 500, and again, it makes its run back up to the 800, this time late at night. So you talk about what time of day do you trade it? Well, we just saw something that's early in the morning, and now we're seeing something that's later in the evening. This sets up, it doesn't matter when you're available to look at your charts. It doesn't matter what part of the country or what part of the world you're in. These will set up, and when they get extreme, you can trade them. But here's an example of 500 away here, and it makes its way back up. It doesn't exactly hit, close enough for me, but it doesn't exactly hit, moves away if you missed it, and then it comes back up and hits it there later too. And then that ended up finishing in the nighttime. If you want one more.
When you traded the Bossilator, Scott, what role did the news play in these trades for you?
What's the news?
Yeah.
I don't know. I did not look at the news. No, the TV wasn't. No, I didn't read Forex Factory. Well, Warren Buffett would tell you, don't listen to the news. If you know what the fair value of your stock is, don't listen to anyone. Well, I have the fair value of my instrument. It's the 800 simple moving average. So what do I need anyone else to tell me? So no, there's no news, no opinion. It was charts, and that's it.
Okay.
Here's an example here, 500. Drop down. And it honestly, when it gets to that magic 500 mark and it starts its run, it doesn't take very long in many, many cases. Actually, in most of the cases, when you start trading this, you know, the trades that I had when I was trading it every day, and I was trading again 1 minute and down, I mean, they're over with. You know, once it really is extreme, it's really been away too long. You know, these trades on the 1 minute chart, it's not big targets, but, you know, they're over with. You know, they're over with in an hour. They're over with in 20 minutes. They're over with in a couple hours. So once you are really trading in extreme, if you have any doubts, see how fast the trades end, because it's been so extreme and so extended, it wants to get over with.
Right.
You want to see one more? Are those good?
Yeah, let's look at one more.
Okay. And here's what I liked. My favorite thing of all time, and really what I look for in my trades is, not only has it been away for 500, again, now it's 5 p.m. in the evening, Eastern Standard Time, so now yet a different time of the day. But you can see that it's been away, but there's also a lot of space. So not only has it been away for time, but they've been away for space, meaning price is very, very overextended. So you've got, talk about your big profit targets here, you've got a lot of space here. So I look for, is it far away and has it been away a long time? I mean, that's just a wonderful combination. If you enter your trade somewhere around here for whatever reason, it goes down and you're really never in trouble. It just goes right down to 800. And you can take profits, you know, anywhere along the way if you wanted to, but if you want to see it to its conclusion, and there it ended. It's only been, in this case, this is a long one, quote unquote, from 1700 to 2200. So it's a 5-hour trade, on a 1 minute chart.
Well, the last point that Scott brought up, the point that we're looking for not only situations where it has become grossly overextended in terms of time, we're looking for situations where a currency pair has spent a long time away from fair value. Sometimes it'll spend a long time away from fair value but stay relatively close to the 800 period simple moving average. And sometimes it'll spend a long time away from the 800 period simple moving average but also move a great distance. That combination is extraordinary because what it provides for us is an opportunity to look at a currency pair that really has spent too long away from home and then also has been so far away from home that the trip back is going to represent a reasonably large profit target. Let me address a couple of different questions. Vittorio asks, is there a time frame that delivers more money? The time frame that will deliver the most money, Vittorio, is the time frame that you're the most comfortable trading. The longer the time frame chart that you look at, the fewer the trades that will set up and the more patient that you will be about setting up those trades and the larger the profit target. But you'll have fewer trades, so even though the profit targets will be larger, your trades will come by less often. If you look at the 1 minute chart, you're going to get 2, maybe at the most 3 trades a day, but probably 2 trades a day. But you're going to be asked to do more screen watching time, and you're going to be asked to make more quick decisions, and your profit targets are going to be smaller simply because you're looking at a smaller time frame chart. That may be interesting to you because you're better at short-term trading than long-term trading. Well, I'm not here today to tell you which one you have to do, But those are the parameters, Vittorio. You can trade the short-term charts and have lots of 20 or 30 pip profit targets, or you can trade the longer-term charts and have fewer 100 to 150 pip targets. The course is all about helping you understand what those profit targets look like on different time frame charts, and then letting you make your own decision about what might work best for you. Ron asks if I stack trades when it keeps moving in my direction. No, because of FIFO rules, first in, first out rules, there will be no stacking. What we'll do is we'll take a trade and we'll take it early and we'll take it with a tight stop loss, and then we'll ride that trade for a long time. Robert says your most highest probability trade will be when price is 1,500 to 2,000 bars away from the 800. Robert is already distinguishing himself as a patient, successful Bossilator trader and is already getting it. If everybody here can just take a moment and read 72 times what Robert just said, all of your dreams will come true. Robert just said something really important. If you wait for price to do something absolutely extreme, you're going to get fewer trades. If you wait for price to do something absolutely extreme, you're going to get fewer trades with the bigger profit target, and you're going to get fewer trades that have a higher percentage likelihood of not being able to go any further. What Robert's saying is if you wait for it to do something really extraordinary and really odd, like on the 1 or 5 minute charts, every, per currency pair, a couple times every 2 weeks, maybe once a week, you're going to get something that is extraordinarily overextended. And when you wait for that to take place, Robert, you're giving yourself a chance to trade something that really statistically has a very low percentage likelihood of going any farther than that. And you get a chance to take a trade at that point. That's an excellent comment, and everybody should take a look at that and remember it. Narav says, am I going to guide us through live trades? Narav asks, am I going to guide you through live trades? No, I can't individually watch you trade live. It won't be possible. That's just simply, Scott, I mean, we'd love to do that for every individual person, watch you trade live. But instead, what we'll talk about in just a moment here, we'll talk about how we can watch what you do and the best way that you can do that. So let's move on to that right now. What you're supposed to do right now is wait for lessons to come out every day. Scott and I are recording lessons and uploading those. And you should patiently wait for those lessons to come out. And you shouldn't try to digest or consume those lessons quickly. There's no purpose in doing that. If you intend to trade for the next 5 years, then there's no purpose in digesting or trying to eat the entire course in one sitting. That is just a pointless exercise, and it would be futile. You would get less out of it, and you would show that you were impatient, and that's not going to be a good combination. A lot of people tell me, well, I'm smart enough to figure it out. I want to take it all right now. I'm not going to let you do that. You're going to work through this course at a patient, manageable pace, and if you are impatient and you can't stand it, then you are an impulsive individual that needs to slow down, period. I'm not here to entertain or give in to your desire to take 1,000 trades in the next 5 seconds. I don't think that you're smarter than everybody else, and I don't think that you're less impulsive than everybody else, and I think that those of you who are willing to wait are the ones who are willing to take trades that only come when the setup has emerged. And so over the course of the next 2 weeks, lessons will be uploaded to the website just about every day. And those lessons will take you one step further in understanding the trades that you can take and the overall premise that we have arrived at. It takes about 30 days for this all to sink in. You can conceptually understand what the Bossilator is in 5 minutes, but you can't really understand what it means to wait for a trade to come along unless you've spent about 30 days looking at it. And I'm not going to make any exceptions for anybody, like at all, so it's not going to happen. What you should also do now is make a commitment to risk 1% per trade maximum every time, no matter what. If you're planning on trading the Bossilator, I'm asking you to make a commitment to risk 1% of your account balance at a maximum every time you take a trade, and no exceptions, meaning you will calculate what it means to lose 1% of your account if it goes wrong, and then you will absolutely get out of the trade if it reaches that 1% maximum, no exceptions. Scott, there's nothing more important at the beginning then managing your risk, and then over time, if you've decided that you've done it well, that you certainly can increase your risk.
That is kind of the ugly part of the Bossilator, is that it works so well that you're going to win. You could win just a gross amount of trades in a row and figure, I always win. Let's go all in, or let's bet too much. And there are times where it is extended. Everything gets crazy from time to time. 2008, you see a lot of examples of that. I think that's the problem, that it wins too much, and that if you're not careful, then that you could have a loss that's way, way too big and ruin all of that. Right.
So that's a commitment that you make right now. What to do right now, set up your charts. There's been some individuals asking for the TradeStation indicator. Scott, there's no problem inside the setting up your charts section of the website. You could just post the TradeStation indicator. We're not going to do any support or large questions and answers about the TradeStation indicator because mainly every chart that we look at will be posted using Metatrader. If you use TradeStation charts and you get it set up on your charts and you're willing to help out and moderate and answer questions for people who do, that's going to be a big help for us. That'll be a huge help, and we really appreciate it. But yes, of course, you can have that indicator, and we're happy to give it to you. After you get your charts set up, you want to work through the lessons as they are uploaded. You want to ask questions. You want to post charts and take small trades and ask us questions about those small trades. Right now, I want to take you on a quick tour through the forum and the chat feature of the forum. The Pip-Touring forum is where all the lessons are given, and I'm going to expand the view of what that forum looks like. So there's a big picture view. The forum right now includes a chat box at the very top of the home page. This chat box will move to the Bossilator lessons page. We're going to move it into there so that the chat box is only visible to the individuals inside of the course. We may move it to a section of the website called the chat box section of the website. If you want to chat live in a group, you can do so inside of that chat box anytime. You should go to the forum right now and check that out. If you're logged into the forum, you're automatically logged into the chat box, and it's just as simple as typing in something down here and then communicating to people. Another way to chat with people inside of the course, at the very bottom of the screen, there's a Who's Online Facebook-style chat feature. You can actually click on someone's name here, and then you can type them a message. Say, like, for example, "Hi, Mark." And I sent Mark a little message right there. And that message window stays static right inside my screen as I move through the website. It's a way for you to have a one-on-one communication with somebody on the website. So let's say you're chatting inside the chat box and you want to take your discussion and just have it in particular with one other individual in the course. Well, you look down here at Who's Online, click on their name, and then start chatting with them. It's a way for me to facilitate conversation between you and other members of the course in a variety of different ways. This chat box, like I said, will disappear from the home page and go into a special chat box area later so that the general public can't come to the website and start chatting with you about Bossilator trades if they haven't signed up for the course.
Hey, Rob, I think I'm still a presenter because some people are still seeing my screen.
Okay, let's make me the presenter. Thanks, Scott. So there you have it. You should be able to see my screen now. And this is the chat box that I was speaking of. And down here at the bottom is the Who's Online that I was speaking of. So Mark just said, "Greetings from Sydney." So Mark and I can have a conversation with each other without logging into Google Talk and giving each other's Yahoo Messenger ID or whatever else. It's a fully contained community, and I encourage you to stay in touch with and communicate with individuals inside the community using these features. You might find that they're helpful, you might find that they're a big, huge pain, and you don't want anything to do with it, but I think it's just a way for you to have more communication with as many people as possible. Right now there's 14 people online together, and you can chat with any of those individually, or you can chat with everybody all at once inside the chat box window. Next inside the forum is a Your Courses section. This course section should show Bossilator lessons and Bossilator webinar registration. If it does not show that to you, you should send us an email and say, please give me permission to see the courses section of the website, and we'll give you administrative access. Over time, as I add more courses on other trading systems or psychology and discipline, they will be found inside of this section. Some courses will be free and will be available to the general public, and some courses, like the Bossilator course, will only be available if you've paid for the course. Only the courses that you've paid for will be accessible through this section, meaning people from the outside world can come to our forum, but they can't see the lessons in the Bossilator course if they have not paid for them. So the information that you have paid for is protected and only available to you because you've paid for it. What those individuals can see is just the welcome and introduction section of the Bossilator course, which describes to them what the Bossilator course is and tells them that if they want to get access to the lessons, they need to sign up for the course. So just so you know that although the website is available to the general public, it's not available in its lesson form with all the tips, the tricks, the strategies, all the things that you paid money for. Those are not available to the general public. What is available to the general public are question and answer areas related to free courses and other information that is available to the general public. Everything is managed by access levels. So if you've paid for a course, you have access to it. And of course, you've paid for the Bossilator course, and of course, you have access to the lessons. And this is sort of an overview of what the forum looks like and how the forum works. Let's see, I don't know if there's been any questions about that, but let's check that out. Okay, who's online is down here in the lower left-hand side, and Manfred wanted to know who's being shown online. So you can individually chat with one person at a time here, or everyone on the chat box. All right. Go back to the presentation. That's a quick tour through the forum and the chat. Maybe one last item. When you go to the Bossilator lessons, you see a big, huge list of lessons. And I wish they were a little bit smaller. You know, I wish that this was a little bit smaller. But these are the lessons one by one. And you can see it goes to 1.1, 1.2, 1.3, 1.4, and then it skips to 2.0. These lessons are just simply in order, and you follow those lessons one by one, and 1, 2, or 3 lessons will be uploaded per day into this section until this entire area has lessons from start to finish on how to trade the Bossilator. If you have a question about the Bossilator or about something that you learn inside these lessons, what I show you here is if you have a question, please move to the questions and answers area of the forum, and it takes you to a different spot to ask questions about this. That way, these lessons will be self-contained and always just be the lesson material, not questions and not answers about those lessons, to keep these sections small, manageable, and just focus on delivering the information. Some people's Who's Online only shows 9, and if that's the case, just go up here to the refresh or F5 on your screen, and it should show you everybody. I don't think I see myself online either. And remember that Rob Booker, the trader, is the one who installed and put all of this information on the forum, and I don't have a full-time technical person doing this. So if something breaks, you just send us an email and let us know that something's not working, and we'll do our best to make it working again. Back to the overview. Charts. We'll support and answer questions about Metatrader 4, and we'll post the indicator for TradeStation, but at present we don't support or provide the indicator for any other charting platforms. And we can do so based on demand, but we just can't do it for a lot of different charting platforms all at once without making a really significant expenditure. You know, $400 to $1,000 per charting platform, and we're just not at present going to do that. Now, I am building together with William a radar screen product which will show all of the currency pairs, in fact, all of currency pairs and all of stocks and other financial instruments simultaneously on a screen inside the forum, and allow you to send alerts to your phone when any of those products reaches a certain number. And that will be a product that we will roll out and release as soon as possible and as soon as it's done. Let's see here what Alex has to say. We don't have lessons available yet. The lessons that are available right now at present are the Setting Up Metatrader and Setting Up Forex Tester chart lessons. By the end of today, everything up until 2.3 will be included. And what Scott will do is setting up other charts. Scott will add a section in here for TradeStation, and we'll get all those up until 2.3 today. And then from 3.0 down to 3.3 tomorrow, 4.0 and so forth. And by the end of the week, we'll get all the way probably through 4.9, and all those lessons will be up day by day and so forth. Scott, do you have any questions, comments, jokes, observations, thoughts, advice, anything else for everybody?
No, I think you were right. If you just have to take it slow, I think what you said was very important, that it's a simple concept, but take your time, because there are a lot of nuances. Nothing works as easy as it seems. So take it slow, but I'm very excited. I'm very excited about talking about this, and I think it can help people.
Excellent. It's great to see everybody here. If you're struggling with logging into the forum and you're not able to access the forum, or something goes wrong when you try to log into the forum, the best thing that you can possibly do is send an email to us at rob@robbooker.com. And I'll just put that email just right here on the screen. Just email us here, and either Wes or me personally will respond to you and give you the help that you need to log into the forum and go from there. And we appreciate you taking the time to come here to the webinar today. What we'd like to do right now is I'll stop the recording. This recording will be available as soon as 2 hours from now, and may take as long as 2 days to integrate into the website, depending on how many problems I have. And will be available to watch inside the forum at the webinar registration section. We'll post the webinar recording right inside the forum in that section. We'll stay around for just a few minutes here, and we'll answer any additional questions that have come up.